Good morning, this is Bloomberg Daybreak Europe. Happy Monday. I'm Tom McKenzie in London. These are the stories that set your agenda. Shares start the week in positive territory, but with investors watching the looming prospect of a possible US government shutdown. Here in the UK, it's Nigel Farage's reform that's looming at the Labour Party conference. Prime Minister Keir Starmer says his government is in a battle for the nation's soul. Plus, Moldova's pro-European government on track to win re-election, keeping the country on the path to EU membership amid allegations of Russian meddling. So, European futures on the front foot this morning, looking to gains of 0.5%. We're set for a solid session then, after a week largely unchanged across the European equity space. For the week in the US, you're a little softer by the end of the week, even if Friday was a positive session stateside, ending the week in its totality down modestly for US stocks. We look ahead, of course, to the risks of a government shutdown. October the 1st is the deadline, and we know that President Trump is set to meet some of his Democratic lawmakers and partners, at least on the other side of the aisle, later as well, possibly tomorrow, to try and resolve that impasse. FTSE 100 futures pointing to gains of 0.4%. So here in the UK as well, looking for some solid gains as we look at the Labour Party conference, of course, and digest what the Prime Minister has been saying. S&P futures looking to add 0.3% again after the gains on Friday, but across the week a little bit of softness. Nasdaq 100 futures looking to add 102 points. Let's flip the board and have a look cross asset then. Treasuries in focus, certainly. We had PCE inflation data on Friday that came in roughly in line with estimates. This week, it is all about the jobs data, of course, expected to cross on Friday. We will get that jobs data if, of course, the US government doesn't shut down. 4.15 right now in the benchmark 10-year. Yields down 2 basis points. You are seeing a bid for treasuries in the session today. Euro-dollar at 117, up 0.2% on the single currency. Spain getting another upgrade from the rating agencies on Friday on the strength of that economy. And Brent at $69 a barrel, a little softer, down 0.4% on reports that OPEC Plus could be looking to put more oil on the market come November, and gold, a fresh record high once again for the yellow metal, above 3,800 right now, and part of that is down to risks around the US shutdown. It seems up a full 1.2% in the session. Gold is ripping higher. Let's cross over to Asia right now. Bloomberg Asia equities reporter Winnie Su standing by, and there's some solid data out of China. Winnie, good morning.
Morning, Tom. Looks like a pretty solid basis today to start off the week, and we see the MSCI Asia up some 0.4% with gains led by the tech shares in Hong Kong and South Korea. And actually, we see that in Japan, things are a bit of an outlier here, down a little bit, mainly because it's ex-dividend day, and also some caution ahead of the LDP's leadership vote this weekend. But overall, Asian stocks quite strong, and we are headed for its 6 months of gains. Now, we take a deeper dive into the Chinese market today. Offshore, onshore, both in the green, and that's mainly driven by the industrial profits surging some 20% compared to last year, and that's its first increase in 4 months. So signaling how this anti-involution campaign is having some benefits on the corporate's profit margins. And also the top contributor here again for HSCEI is Alibaba, after Morgan Stanley boosted its price target for the ADRs, citing the growth prospect when it comes to the cloud business. So overall, a very strong picture around the AI story. But also another bright spot here in Asia, and especially in China today, are the consumer stocks. We are seeing travel stocks like Trip.com, and also the casino stocks in Macau rising with expectations coming up ahead of China's 8-day-long Golden Week holiday. So we are expecting more spending, and that spending data is going to be key for investors to gauge if there is going to be a turnaround in the economic picture, and if policy is actually going to translate into the real economy.
OK, Bloomberg's Asia equities reporter Winnie Su with a check on the Asian markets. The data strong out of China, and we look ahead, of course, to more data coming through this week on the consumer and whether or not some of that policy is starting to have a material impact. Winnie, thank you. To the UK right now, Prime Minister Keir Starmer framing his political survival as the UK's best hope of defeating populism. Starmer heads into his Labour Party's annual conference facing questions, of course, about his leadership and pressure in the polls from Nigel Farage's Reform UK. Bloomberg's UK correspondent Lizzie Burden is in Liverpool for us. Lizzie, what is the mood on the ground? How significant is this conference for Starmer, given the multiple pressures that the Prime Minister is now facing?
Well, Tom, it's only been 15 months since Keir Starmer led his Labour Party to a landslide election victory. And yet already in Liverpool there are many who are saying that he's a dead man walking. He's been hobbled by the forced departures of his deputy and his ambassador to Washington. And you mentioned the polls. A YouGov poll showed that if there were an election now, Labour would lose to Reform. And so because of those polls, there is a lot of worry among the MPs, the new MPs who've only just got their seats, that they need to replace Starmer. And already you've got open leadership challenges. For example, from the Mayor of Manchester, the self-styled King of the North, Andy Burnham, who's been really filling out rooms here at conference. He's talked about how the government shouldn't be in hock to the bond market. Just yesterday he was talking about how the Prime Minister is cultivating a culture of fear within the party. But there are also more subtle challenges as well. The Health Secretary, Wes Streeting, for example, openly criticising President Trump and so breaking with the Prime Minister's softly approach to the US President. Now, Keir Starmer's response has been to take a more aggressive tone on Nigel Farage. Just take a listen to what he had to say on the BBC yesterday.
We have got the fight of our lives ahead of us because we've got to take on Reform, we've got to beat them. And so now is not the time for introspection or navel-gazing.
Now, the risk is that by criticising Farage's policies, for example, on immigration, calling them racist, he alienates those who are thinking about voting for Farage. But the real key to this conference will be for Starmer to articulate his vision for Britain. It's being branded a conference about renewal. This is the slogan here, but even some of Starmer's closest allies still cannot tell us what Starmerism is about. So this is crucial. It's make or break for Keir Starmer, this conference.
OK, and before we get to the Prime Minister's speech, of course, we're going to hear from the Chancellor later today. Lizzie, what are we expecting? What are you be tuning in for in terms of specific lines that Rachel Reeves may be looking to drop at this speech?
Yeah, this speech coming at 12 o'clock London time, and really it's one of the most important of her political career. Her own personal ratings have cratered as well, and the backdrop is the public finances in pretty perilous condition. That's her words. You've got, of course, yields at multi-decade highs, pretty weak bond auctions recently when it comes to gilts, and yet ever since the last fiscal event, questions mounting over which tax rises there will be in the autumn budget that's coming up, because our economists estimate that there's a £35 billion gap she is going to fill. But Reeves really caught between the bond vigilantes and the left wing of her party, who, as we know, wouldn't countenance reforms to welfare cuts. I mentioned those comments from Andy Burnham, the Mayor of Manchester. How is she going to plug this hole? The Prime Minister yesterday refusing to give a simple yes-no answer when asked to guarantee that VAT isn't going to rise. So there'll be a focus today on whether Reeves hints that she's going to lift the two-child benefit cap. It would cost £3.5 billion, it has been estimated. If she drops those hints, you can assume that there'll be weight on gilts and sterling, Tom.
OK, Bloomberg's Lizzie Burden in Liverpool. Thank you very much indeed. We're going to have more coverage, of course, of the Labour Party conference, including an interview with the Chancellor, Rachel Reeves, this morning at 9:15 UK time. So certainly stay tuned for that interview, of course, between the Chancellor and Lizzie Burden. Now, President Donald Trump and top congressional leaders are set to meet, meanwhile, to discuss a short-term spending bill to avoid a government shutdown. While Democrats are insisting on healthcare provisions, Republicans want to address those issues later.
And what the Democrats have done here is take the federal government as a hostage, and for that matter, by extension, the American people, to try and get a whole laundry list of things that they want that special interest groups on the far left are pushing them to accomplish.
It's up to them. If they come into the meeting to seriously negotiate, and the reason we've been pushing for months, we've been resolute, that we need a meeting, that we need a real negotiation, that you don't do this by one party putting together a completely partisan bill and saying take it or leave it. So they felt the heat. The president at first said no. Remember, he first said yes for a meeting, then he said no for a meeting. He went on a rant against Democrats. But I think they felt the heat, and they now want to sit down.
OK, for more, let's bring in Bloomberg's Jill Deeses. So, Jill, there will be a meeting, it seems, between President Trump and some of those leaders from the Democratic side in the next 48 hours or so. Can they avoid this October the 1st shutdown? What do we expect to come out of that meeting?
Well, Tom, I mean, they're certainly, running this a bit down to the wire, right? You've got really until Wednesday. That's when that shutdown deadline ultimately hits here. As you just heard from both of these members, you have some pretty significant differences in what exactly they want to accomplish going into the meeting. Democrats, of course, trying to get some level of concessions from those Republicans. They're looking specifically at some extensions for some health care subsidies, also the reversal of some health care related budget cuts. Republicans saying that can wait until after they get this deadline passed. Of course, from the Democratic side, they'd argue that there's not really a guarantee necessarily that Republicans are going to be willing to revisit some of those options if they do agree to this particular continuation bill here. So I think that's really the rub here. Ultimately, Republicans are going to need, I think, 7 Democrats to sign on with them. And I think, really the reminder here, Tom, that this bill would only actually keep the government open until about mid-November. So this is really a short-term stopgap spending bill that does keep that government open. We haven't had a U.S. government shutdown since 2018, 2019. So it's been quite a bit there. That was actually during Trump's first term in office. So will we actually see something this time around? I think, we'll have to wait and see. Really critical how this leader meeting goes between Trump and these Republicans and Democrats once we hit U.S. morning today.
Yeah, and there's always that debate, isn't there, as to which party pays the price of any government shutdown. Bloomberg's Jill Deeses, thank you very much indeed as we look ahead to that meeting between the president, of course, and some of his Democratic counterparts on the other side, of course, of that debate. Now, from the politics to the markets, are traders concerned about the potential US government shutdown? Again, it could kick in shortly after October the 1st. Let's bring in Bloomberg's Valerie Teitel right now. We have the jobs data, of course, Val, landing on Friday. I guess the question is if that data actually comes through, how much concern is there in the markets right now?
Yeah, a lot of risk events to keep our eye on. The fact that we could not get that payroll report if we do have the government shutdown happening on Wednesday. But the markets are starting this Monday fairly positive. We have S&P futures in the green, the dollar softer, and yields are lower. And that's based on the confirmation that those Democratic leaders will head to the White House for a discussion with Trump. This is a meeting he canceled last week, Tom. So at least the reading of the tea leaves to start the Monday is that we are looking positive to get some sort of resolution, before midnight on Tuesday. Even in the betting markets, if you flip the board, take a look at Polymarket odds of a U.S. government shutdown in 2025. They have dropped from the highs. They hit nearly 85% over the weekend. And after that confirmation of this bipartisan meeting with President Donald Trump, we're now standing at 74%. So we have, I guess, calmed down our fears just slightly. But we have to also remember we have a lot of data this week when it comes to where the U.S. labor market is heading. We do start it off on Tuesday with JOLTS. Then on Wednesday, we get that U.S. ADP report. Thursday is jobless claims. Friday, the big non-farm payroll. But the risk the market's mind is how can this bond rally extend if we don't get that NFP on Friday, if we do get this government shutdown and some of this data is delayed. OK,
Bloomberg's Valerie Teitel, thank you very much indeed. Right now, Treasury's bid with yields down between 1 to 2 basis points across the curve. Here's what else to think about across this week then. On Tuesday, we get inflation data out of France, Germany and Italy. So the CPI print coming through, of course, as the ECB remains on hold with rates at 2% and inflation in line with target. We'll see if that adjusts tomorrow. And on Wednesday, China's Golden Week holiday begins. So you've got a closure of domestic Chinese markets and a gauge as well in terms of the strength of the Chinese consumer. And on Friday, as Valerie was saying, we do get the US jobs report. That is, of course, if the US government remains open. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBgo on the terminal. And we have OPEC Plus and reports that it could be adding more oil to the markets in focus. Coming up, Moldova's ruling pro-European party on track to win re-election. We discuss what it means for relations with Russia and the war in Ukraine. Plus, we will talk to Matt Miller, former partner at Sequoia, the founder of Evantic Capital, about his new $400 million UK-based venture capital firm, a big player in the world of venture capital. That conversation coming up on this show. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Moldova's ruling pro-European party is on track to win re-election, keeping the country on the path to EU membership and raising the risk of an escalation in tensions with Russia. For more, we are joined by Mark Champion, who writes about international affairs for Bloomberg Opinion and is in the Ukrainian capital right now, Kyiv. And, of course, we've heard warnings from the Ukrainian president last week about the risks to Moldova. Mark, what do we know about the election results so far and what the reaction is likely to be then in Moscow?
Yeah, so it looks as though the pro-EU party has won just enough to get another majority in Parliament. It will be contested. Even before the vote began to be counted, the Patriotic Bloc, which is made up of a group of, demonstrably pro-Moscow parties, they already said that they didn't believe that it would be a fair vote and that they called for protests. That was before the vote count had begun. It is always going to be controversial. The Russians, I was there a week or so ago to look at what was going on in the campaign. And there was a huge amount of Russian interference. The government itself also intervened heavily by banning a number of parties that where the funding they discovered was coming from a fugitive billionaire who's in Moscow, and for a number of other reasons, all to do with Russian interference. So it has been a very tough campaign, very controversial. The stakes were high for Russia. This is a country that's on the other side of the flank of Ukraine. There's a pro-Russia separatist territory there, which they're cut off from, but which they had hoped at the beginning of the war to be able to use and to reach. It's very close to Odessa, which is another major target for President Putin. So it is not over. Russia will not simply give up, but this was a big moment, a moment at which Russia could really have achieved some important goals by simply delaying and slowing the Moldova's road to the EU.
What does that road to the EU now look like, Mark?
Tough, but this is one where the EU itself has been pretty committed. It has been spending quite a lot of money in order to create benefits that voters in Moldova can see. And they have been really working quite hard with the Moldovans, who themselves, the Moldovan government, have been a bit of a star pupil in, trying to meet the pretty exacting requirements of joining the bloc. This is a rare instance, I think, where the EU has been acting fairly geopolitically, not just sort of keeping guard against the wrong kind of nation getting in, or just insisting purely on the rules. They are insisting on the rules, but at the same time, they're being quite proactive in trying to help the Moldovans to make it. It's a smaller country. It's very connected to Romania next doors. So I think there's the government's fairly confident that they have a decent chance of getting through all of the requirements over the next 3 years. Again, the EU had acted quite geopolitically. They were fully aware that if you had a pro-Russia government with an airport right the other side, an hour or two from Odessa, you could have had a real problem with the Russians using that to infiltrate behind the lines in Ukraine.
Mark, just very briefly, as you are on the ground in Ukraine, in Kyiv, what is the latest in terms of Russia's most recent attacks on and across Ukraine?
Well, there was a very large attack yesterday, one of the largest that we've seen. and it had a quite awful impact in terms of hitting a hospital and a residential building. Several people killed, a lot, many more wounded. And it's really, I think, what we're going to see increasingly during the winter. Increasingly, you'll see the energy infrastructure targeted in a much more saturated and directed way than in previous winters. So I think it's going to be quite tough going forward.
OK, Bloomberg opinion columnist Mark Champion in Ukraine's capital, Kyiv. Thank you very much indeed for that update, of course, on Ukraine and the election in Moldova. We do appreciate it. Coming up, Prime Minister Benjamin Netanyahu of Israel, of course, is set to meet with the US president as Israel's biggest ally. Intensifies a push for a ceasefire deal in Gaza. We are live from Jerusalem. Next, this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Benjamin Netanyahu will meet with Donald Trump amid assertions from Washington that a plan to end the war in Gaza is nearly complete.
It's looking like we have a deal on Gaza, and we'll let you know. Mr. President. I think it's a deal that will get the hostages back. It's going to be a deal that will end the war. It's going to be a deal it's going to be peace.
OK, for more, let's bring in Bloomberg's Dan Williams, who's on the ground in Israel for us, of course. Dan, what do you expect to come out of this meeting?
This would appear to be a day of significant consequence for a war that is a week away from hitting its 2-year mark, a war that's been destructive, exhausting, very painful all around. In fact, it began in the Gaza Strip, it expanded throughout the region, and now it's returned to the Gaza Strip with the Israelis pushing into Gaza City, the de facto capital of that Palestinian territory. It would appear, however, that the Israelis are realizing now is a moment to draw this to a close. What we're hearing is that Israel is largely in agreement with the Americans over this Trump plan for ending the war. We're not clear on how Hamas will respond, or even if Hamas has received the plan. However, it would appear that Trump has already garnered the support of significant stakeholders in the region other than Israel, including Qatar, Egypt, Turkey, all of them countries of great consequence for Hamas. So the big question will be what will be announced at the White House today, and whether in the time that will elapse between now and that White House meeting between Netanyahu and Trump, between their news conference, Hamas will have been informed, Hamas will have been brought aboard, and perhaps by the end of the day, we might see a deal concluding this war or leading to its conclusion.
OK, so a significant day in terms of that meeting between the US president, of course, and his Israeli counterpart, Prime Minister Benjamin Netanyahu, who will, of course, be meeting with Trump, it seems, later today. Dan Williams is setting out what to expect and some of the elements that seem to possibly have fallen into place around a potential deal. Dan on the ground for us, of course, in Israel. We'll be getting more on that story throughout today and the week. Oil, thank you. Meanwhile, Dan, thank you. Meanwhile, oil is retreating this morning. This as Bloomberg understands that OPEC Plus is likely to raise output by at least as much as 137,000 barrels a day in November. The group's set to continue its strategy to reclaim market share over maintaining prices. We're going to switch focus, though, after the break. We're going to talk to Matt Miller, the founder of Evantic Capital, about his new $400 million UK-based venture capital firm, a significant player within the VC world. That conversation is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. Happy Monday, I'm Tom McKenzie in London. These are the stories that set your agenda. Shares start the week in positive territory, but with investors watching the looming prospect of a possible US government shutdown. Here in the UK, it is Nigel Farage's reform that is looming. At the Labour Party conference, Prime Minister Keir Starmer says his government is in a battle for the nation's soul. Plus, Moldova's pro-European government on track to win re-election, keeping the country on the path to EU membership amid allegations of Russian meddling. So, European futures on the front foot this morning. The dollar taking a bit of a hit, down 0.2%. European stocks looking to add 0.5 after a week of essentially remaining flat by the end of the close on Friday. European equities had not gone far last week. Today, though, looking to some gains. We look ahead, of course, the risks domestically, politically in the US as to whether or not there is a government shutdown. Non-farm payrolls and jobs data dropping on Friday. FTSE 100 futures here in the UK looking to add 35 points. S&P E-minis up 0.3%. Nasdaq 100 futures looking to add 107 points, pointing higher by 0.4%. Let's flip the board and have a look at the Treasury markets. A bit of a bid coming through for US Treasuries. Yields down across the curve between 1 to 2 basis points. On the benchmark 10-year, 4.15. Yields down 2 basis points. Euro dollar, the single currency, getting a lift from softer greenback right now. Up 0.2% on the euro. Spain getting double upgraded by the close on Friday on the strength of that economy. Brent at $69 a barrel, down 0.4 on the prospect of more OPEC plus oil on the markets as soon as November. And gold, a fresh record high. The yellow metal above $3,800 for the first time. Look at that, up 1.3%. Gold is ripping in the session today. Now, let's get to the world of venture capital and tech. A former partner at Sequoia Capital has launched a $400 million UK-based venture capital firm. Evantic Capital is an early investor in European unicorn Lovable, an AI-powered app development platform. Amongst others, the fund is seeking to invest in AI companies across Europe, Israel and the United States. The founder of Evantic Capital, Matt Miller, is here with me now in the studio. Matt, thank you so much for taking the time. Formerly, of course, a partner at Sequoia, formerly and prior to that at Goldman Sachs in San Francisco. So, Matt, you come to us with this $400 million fund. You're based here in the UK now. Talk to me first about the structure of your VC model, because it's quite unique, and how that gives you a competitive edge and your portfolio companies, potentially.
Absolutely. First of all, thank you for having me, Tom. I really appreciate the opportunity to be here with you today. When I was at Sequoia, one of the things that I saw working with so many companies was the power that great operating talent had when it came close to exceptional founders. And when I set out to go launch my own firm and build my own firm from here in London, I wanted to create a model that brought exceptional talent and aligned it with exceptional founders. And what we've done is we've created this business partnership where we have a community of 140 people we call the Legends, who are strategic partners, who are some of the most experienced executives, founders, builders, operators, and investors who've worked across great technology companies in Europe and in the United States and in Israel. And we have this, are invested in Evantic, and then we share up to 50% of the carried interest.
Which is a big change.
Which is a big change. We share up to 50% of the carried interest with this community as they help us source, win, and build. And so it creates this really dynamic value proposition for founders that when they work with Evantic, they get access to this incredible community of legends, and they're economically aligned with them in a way that they've never been before. And for LPs who are our business partners also in investing in us, we get access to differentiated deal flow and interesting companies because we bring these legends and their networks to bear in helping to create great venture capital opportunities.
Do you think this ends up changing the venture capital industry?
I mean, we hope so. I mean, I think that for a long time there's this talk about VC value add, and many people try to go be helpful and make introductions, but at the end of the day, all of the partners in a firm are busy and their capital is limitless, and they're doing many different things. And I felt like the most tangible thing that we could do is create this great mentorship dynamic of bringing great legends, great builders and operators, letting them share in the economics as if they are partners in a venture capital firm, but they get to focus on what they are doing best, and they get to bring their value and experience to the founders who are creating special companies.
Yeah, because carried interest typically around 20%. You're now, as an incentive to those legends, quote unquote legends, 50%. So that's a material change. You've raised $400 million. How are you deploying that? Where is the focus, Matt?
Yeah, so the focus, we're at the beginning of this incredible age of AI, and we're just in the earliest days. And so our focus is on B2B AI companies across Europe, United States, and Israel. Focus on the West, investing from here in London. And we've had the pleasure of partnering with 7 companies, 5 of whom we're able to share today. Of the 5 we're able to share, 3 are within Europe and 2 are in the United States.
What do you say to people like Jack Selby, who manages Peter Thiel's money, who says we could be looking at a bubble that could wipe out, and he says tens of billions, possibly hundreds of billions of dollars? Does he have a point? How concerned are you about some frothiness in this market? What is your response to that, Jack Selby?
Yeah, in situation by situation, there for sure is frothiness, but overall, the economic opportunity we have on the other side of the rollout of AI and the rollout of more intelligent applications and autonomous applications is tremendous. And I look at it like the .com era sure had its period where there was lots of peaks, lots of things that got overexcited, but some tremendous companies came out of that with huge market caps. And so I think that similarly today, there will be some situations where there'll be some businesses that will be funded that don't have good business principles, that may be a bubble, but there's lots of value and lots of opportunity ahead.
And of course, you moved a few years ago from the Valley, right?
I did.
To London. What is your thesis for Europe, Matt?
Look, I believe there's Europe and there's London. I believe that London is one of the greatest cities in the world, and outside of San Francisco, and if you're not from San Francisco, London is the best place to come to build an AI company. You have access to capital, you have access to incredible talent, and you have a community here that is eagerly engaged to support you. And there are many American founders who are now moving to London to build their businesses here. One who I think is today later on your program.
Yeah.
But there are many of these, and there are great companies coming up here in London and founders moving from Europe to be here in London. I think that London is underestimated by the world in its power. And if you think about the U.S. is really San Francisco. And outside of San Francisco, London is really right up there as probably the second best place, in my opinion, to build an AI company today.
What is the biggest missing ingredient, if there is one, to get growth and scale companies out of the UK, out of Europe?
Experience, which is part of why we created this Legends model. As I looked at what I could create that would really help the founders of Europe, it's to connect them with great experience to help them build. In San Francisco, there's incredible density. You go to every coffee shop, and every single conversation is about a tech company. It used to be about crypto, now it's about AI, now there's a little bit of crypto again. But you go to London, we're talking about art, we're talking about shipping, we're talking about all these different industries, because we're just more dispersed and diversified here. And there's the need to be able to access and come in contact with the people who've had the experiences who can help you grow your business. And that's what this Legends model helps engender, is it creates this community of people who are spread out across Europe and the United States, who are all eager to help young companies scale and win, and helps us kind of bridge that gap and bring that talent together with these founders.
When it comes to funding, I would imagine, given your pedigree, your time at Sequoia, 20 years in the industry, and all of your track record, that raising that $400 million for a Matt Miller was probably not that challenging. But how often, I mean, correct me if I'm wrong, but how often do LPs come to you and say, look, we are concerned about the exits environment, about how long liquidity is being tied up for? To what extent is that an issue for you or others raising this in this space?
It for sure was a question throughout the fundraising process, and but I think we can look now. We see some great IPOs that are happening again. We're seeing some great. We had Sana Labs, which is a great M&A European exit, selling to Workday. So we're starting to see more exits happen. I think the exit environment is warming up with the change in the political environment, and I think it kind of ebbs and flows. But great companies always create value, and that value always has opportunities to manifest itself back to its shareholders. And I think that will continue to be the same, even though liquidity over the past few years has been more difficult.
I want to get one last in, because it's the Labour Party conference, Matt. You've just given a fantastic endorsement for London. Are you concerned at all? Are your community concerned at all about what this government might do in terms of wealth taxes, in terms of carried interest, around changes that may make it less, or at least reduce the incentives?
Very concerned. I think we need to align the incentives for people to come here to build great companies and to be rewarded for building great companies here in the UK. And we have this incredible resource of being in an amazing city with amazing talent, and the world is our oyster. We just need to not mess it up.
Matt Miller, thank you very much.
Thank you
for your time. Really appreciate it. Founder of Evantic Capital on that $400 million fund, portfolio companies, including the likes of Lovable. Let's get to a very different space right now. The airlines, Lufthansa, and a line crossing, of course, from this German flight, of course, German airline, and this is around job cuts, which we had expected some numbers to come out because of the challenges for Lufthansa. And I'll just break some of these key lines for you right now. They are set to cut 4,000, Lufthansa to cut 4,000 admin jobs. That's by 2030. By 2030, that is about 20% of administrative staff. That is expected, of course. Lufthansa to cut 4,000 admin staff by 2030, targeting 8 to 10% adjusted EBITDA margin for 2028 to 2030. So that's the target around EBITDA margins, 8 to 10%. Lufthansa targeting free cash flow per year of around €2.5 billion. Job cuts will be, the majority of job cuts will be in Germany. So that is a stock for you to watch at 8 a.m., of course, UK time. Lufthansa, well, those job cuts on the challenges facing that German airline. Now, Moody's and Fitch have upgraded Spain's credit ratings to the macro right now. Both firms raising their assessments by one notch. Despite political instability, Spain's growth has outpaced Europe's other big economies since 2021. Forecast to more than double the growth this year versus the Eurozone forecast. Let's bring in Bloomberg's Spain Bureau Chief, Rodrigo Orihuela. Rodrigo, Spain's credit rating then one notch above junk during the Euro area debt crisis. Quite a turnaround then for Spain and its economy.
Yes, that is indeed the case, and it's also more striking because these are the second and third rating agencies to do this in a few days. The other one, S&P, did it, I think it was in late September, and it is quite striking. As you say, the growth story really took off. It had started before the pandemic, but it really took off after the pandemic. Main reasons there being tourism. There's a huge boom in tourism. Spain, as we know, second largest recipient of tourists in the world, third depending on how it's measured, but it's roughly around there. Around 100 million tourists coming in this year, so that's a huge boost to the economy. But it's not only that. There are other factors. One of them is a big growth in exports of other services, engineering, financial, all kinds of services are really growing. And then there's private spending has also been increasing and helping bolster the economy. So there are several factors going in there. Some economists are already starting to speak about a slight change in the model that we're seeing, where it's not only dependent on tourism, and rating agencies or rating companies seem to be happy with what they're seeing.
OK, what a turnaround for the fortunes of Spain at a time, of course, where you still have that budget impasse and the political instability. Bloomberg's Rodrigo Orihuela in Madrid for us. Rodrigo, thank you for that update on the back of the upgrades that come through for Spain. Now, some other stories making the news this Monday. Jaguar Land Rover is to get backing from the UK government for a £1.5 billion loan aimed at easing the strain on suppliers hit by a production halt triggered by a cyber attack. The government says the loan, to be provided by a commercial bank and guaranteed by UK Export Finance, will be repaid over 5 years. This is India's Economic Times reports that JLR's owner, Tata Motors, is seeking £2 billion in emergency funding from global banks. And within the last few minutes, Denmark's Genmab has confirmed Bloomberg's story. It is to acquire Merus. That's a Dutch drug maker that's developing a treatment for cancer of the head and neck. Genmab will buy Merus shares for $97 each in an all-cash deal at a transaction value of approximately $8 billion. Coming up is software as a service now dead. I'm going to be joined by a tech founder who's arguing exactly that. Manny Medina, CEO and co-founder of Paid, is with us next. Also on how to pay agentic AI. That conversation coming up. This is Bloomberg. Now, the rise of AI agents has brought with it the question of how much developers of their technology should be charging their customers. The traditional software pricing model of charging per user is looking pretty redundant in that environment. So what is the solution now? With me is Manny Medina, co-founder and CEO of Paid, which is described as a platform that makes sure AI agents get paid profitably. Manny, of course, has deep experience as well in Silicon Valley, having built and exited companies there. Manny, thank you for joining me in the studio. And it wasn't by design, but we're doing a bit of a shout-out for UK tech right now. So we'll get to your views on why you've moved over to London shortly. But let's start with what Paid is and what it does, what the proposition is.
Yeah, so Paid is the business engine for AI agents. So it turns out that AI agents perform all the work They don't perform some tasks and wait for humans to help them out. They perform the majority of the tasks. So how do you price that? How do you make sure that they get paid for the value they delivered? How do you make sure that your pay is above your cost? As you know, token costs can run out of control, so you want to make sure that
that's the compute cost.
That is the LLM cost.
Okay.
And the compute cost. And maybe you have other things, like maybe you have some 11 labs, maybe you have some OCR work, maybe you have some other kind of work that drives up your cost. And third, how do you show the work to your end customer? Because a lot of the times these agents are running in the background. So you need to make sure that you get paid for the work that you did, and then you show the customer that they received the value.
Is this a future proposition, or is this a here and now? Is this a this year problem that needs to be solved? Agentic AI, is 2025 the year when we start to see this in a material way?
100%. It's here, it's now, it's relevant, and everyone is rushing to build agents and to deploy agents in the enterprise.
And when you speak about demand, what are you hearing from enterprises and from the makers of this tech in terms of how much demand is there, and how big this market could potentially be then?
So let me give you a little bit of perspective. In about 5 years, we expect half the workforce to be agents.
Half the workforce
to be
agents.
Half in 5 years. Half the workforce to be agents. That is $1 trillion market. We're not just replacing work, we're replacing services, we're replacing software. Things are getting bundled in the corpus of an AI agent.
Wow.
So there's a massive demand right now, not only because of efficiency, but because of cost cutting and higher productivity.
You've raised $31 million. Your backers include the likes of Lightspeed Ventures, EQT, Sequoia, so some of the most respected names in the world of VC. How are you deploying that cash?
I think we're mostly deploying right now by hiring here in London. London has a vibrant, deep and concentrated talent pool that we're tapping into, and we're building the company here.
Just explain, Manny, given your time and experience and your success in the US, why then you decided to move to London and do this here?
I think there is a lot of advantages of being here. I think that there is, so first of all, I built a company in Seattle before. Seattle has 1 million people. London has 12 million people. So the size alone will allow you a larger amount of talent to be available. The second thing is there's not that many tech companies here. There's a few that are growing really fast, like 11 Labs and Synthesia and a few others, DeepMind, et cetera. But there's no saturation the way that we have it in the U.S. and San Francisco or in the West Coast. So there is a lot more people coming out of great universities, getting good jobs, and then we can tap into the talent pool and build a company here that is a lot easier than, to be frank, than it was in the U.S.
And do you expect most of your clients and customers, though, to be in the U.S. as you build the product here, you build the team here, but you're shipping largely into the U.S.? How do you see that breakdown in terms of the demand and where the drivers come from?
So clearly, the U.S. is ahead of everybody else in terms of demand, in terms of building AI agents. But I set out to build a global company, so I want to be global from the very beginning. So we're selling both right now in Western Europe and in the U.S.
Okay, Western Europe and the U.S. Now, look, you talked about in 5 years' time, 50% of the work being done by agents and agentic AI.
The workforce.
The workforce. What does that mean then for jobs, and particularly for entry-level jobs, Manny?
So we are clearly seeing a decrease in demand for entry-level jobs, which is a little bit worrying. I think you saw the Stanford study that entry-level jobs are down 13% already. And I think anecdotally, we also have heard that the youth coming out of schools are having a hard time finding a job. So I think that, to be honest, our point of view is that most people should become entrepreneurs. Most people should go out and just build agents, install paid and get paid for the agents that they're building. And we're going to see a resurgence in entrepreneurship. Usually, mankind is very adaptable, especially in this era of tools being very available to everyone. Yeah. So don't wait for a job to open for you. Make one by building an agent and selling it.
Okay, build an agent and sell it. If this is the year when agentic AI really takes off, what does 2026 look like in terms of the capabilities of these agents? And how you kind of price around that then?
I think that in 2026, we're going to start seeing org charts with agents in them. So you're going to have people and agents intermixed. You're going to have, in the EU AI Act, agents need to have bosses, if you would. So you will see org charts with a boss and several agents working for that boss. And the agents will get paid for the value delivered. So whether it's a full-time equivalent replacement or whether it's a task performed or an outcome had, that's going to be the plethora of payment mechanisms and monetization mechanisms agents will have available to them.
You mentioned the EU AI Act.
Yeah.
Is that a hindrance to innovation and to you and the team, or is it a set of guardrails that helps?
I think it's it's just like GDPR is Europe's opinion on how work will be transacted in the EU, with AI agents. And I think at least it's clear to know where we're going and what we stand for here in Europe and what we need to abide to make commerce. So I don't see it as a hindrance. I just see that those are the rules of the game here. You have to play by that rule.
Okay, Manny Medina, thank you very much indeed on the case for building in the UK, in Europe as well. Manny Medina, co-founder and CEO of Paid, on how to pay these AI agents as that innovation and technology matures. Manny, thank you. Now to sport. Europe has retained Golf's Ryder Cup after a tense final day. What a game this was. What a sporting achievement it was, in which America threatened an unlikely fight back in New York. It was Ireland's Shane Lowry who had the final say, though, sinking a 6-foot birdie putt to earn the half point Europe needed for the win. This year's edition of the tournament proved controversial, with the Europeans having to contend with a hostile home crowd. Northern Irishman Rory McIlroy called the behaviour, quote, unacceptable and abusive after he was targeted with insults. There's plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So, as the US president looks to sit down with Democratic lawmakers to discuss the standoff, of course, leading up to October the 1st and a potential US government shutdown, the political cost, of course, of any shutdown will be being calculated by both sides. Here's the approval ratings then, just to compare for you. Congress is the blue line, deeply unpopular, and that's been a long-term trend, of course. And this is the approval rating of President Trump since, of course, in his inauguration earlier this year. So, yes, President Trump's approval rating has edged lower, but he remains far more popular than Congress. Who pays the political price as the markets look at the economic costs as well? All of that coming together ahead of October the 1st. We'll see if those conversations make progress, of course. Let's flip the board and talk about the politics of the UK, because Rachel Reeves, the Chancellor, will give a speech later today, caught between the bond markets and her backbenchers, and a reminder of just the risk premium that has been baked into UK sovereign debt then. And the yield moved higher across the 30-year here in the UK. And you compare that even to France, with all the political challenges in France, all the numerous prime ministers. Have we had 5? I've lost count. Even versus France, the challenges for the UK are looking more pronounced when you look at the gilts and the 30-year versus the US as well. That is pretty significant. Let's flip the board and have a look what's happening in tech, because there's increasing conversations that Mag 7 is very outdated because it doesn't include the likes of Broadcom and Oracle and, yes, Palantir. Look at the move from Palantir. That's the yellow line on the board we've got there. In terms of the light blue, that is Broadcom. Oracle, of course, and the CEO of that company at one point becoming the wealthiest man in the world. So investors and analysts thinking about whether we rethink the Mag 7 to include some of these key names when it comes to AI. Now, we're going to have coverage, of course, of the UK Labour Party conference. That continues, including an interview with the Chancellor, Rachel Reeves, this morning at 9:15 UK time. You need to tune in and stay tuned for that conversation. The opening trade, of course, is up next. This is Bloomberg.